Right, we get this total 170,000. So it's gonna be, this is equals to 170,000 minus the first one, accum dip, minus the amount which was sold for, and then we get this. And because it is on the credit side, it becomes the loss on sale of asset. Now, this loss on sale of asset is already determined, but I just wanted to show you in terms of T accounts. But in terms of this calculation, it becomes very, very simple, because now what you needed to do there was to show that this 170,000, which was the carrying amount of this vehicle, minus accumulated depreciation, which is 25,500, minus the amount which it was sold for, which is 140,000. It was sold for 140,000, and then in that essence, it will just show you the amount. Let's look at the calculation. Is 170,000 minus 25,500 minus the amount which it was sold for, 140,000, and then it just gives us 4,500, which is a loss on sale of vehicle. You can say loss on sale of asset, which is 4,500. And then you have now your statement of comprehensive income, where now under the operating expenses you have another operating expense which it's not given, but you had to calculate it, which is loss on sale of asset, and they can give you about 3 marks for this, which is 4,500. That's so, yes, 4,500. And then you're done with that transaction. Let's look at the next transaction. Where is my question paper now? It disappeared. Equipment. An alarm system costing 48,000 was installed on 1 August 2021. Let's look at the given answer sheet to say, okay, we gave them workings, we have calculated. Now they say to us, calculate the total depreciation for the year. Total depreciation for the year. Total depreciation. And then there is this one which is given. Look at the answer sheet. They say depreciation before adjustments. Depreciation before adjustments. And it's given 328,200. 328,200. And then we have this one of vehicles. We just calculated it to be 25,500. And then we have the one now for equipment. What about the equipment? Let's read the adjustment. What about the equipment? An alarm system costing 48,000 was installed on 1 August 2021. An alarm system costing 48,000 multiplied by 15% multiplied by was installed when? August until Feb. August, September, October, November, December, January, February. It existed for 7 months. And then what is the value there? 48,000 multiplied by 15% multiplied by 7 divided by 12. 48,000 multiplied by 15% multiplied by 7 divided by 12. 4,200. Now, is there any amount which is depreciation? I don't think so. And then you put this as a total. Put these lines. You can put these blocks, all borders sharp. Close it here. Total value of depreciation is equals to that one which was given plus the one for vehicles plus the one for equipment, which the total becomes 357,900. And that 357,900, you look at, you have the depreciation for equipment, you have the depreciation for vehicles. Now, operating expenses under statement of comprehensive income, you have what we call depreciation, and it's already calculated. So you just transfer this amount, 357,900. 357,900, and then you carry on. You've answered now the concept of depreciation. You are happy with that concept. You carry on. Now, 33,700 received from a debtor whose account was previously written off as irrecoverable was posted in error to the debtor's control account. This must be corrected. 33,700 received from a debtor, literature now, it's English, whose account was previously written off as his account. We thought he will never come back. We thought, okay, let's write him off as somebody who will never come back. To our surprise, he came back as a bad debt recover. He recovered, bad debt recovered. Now we have this concept of other income where we got bad debts recovered. How much was recovered from this debtor? How much? 33,700. Now, however, the provision for bad debts must then be adjusted to 3% of the debtor's control balance. The provision for bad debts must then be adjusted to 3% provision for bad debts. Why I'm doing this is to determine whether it is provision for bad debts adjustment in terms of income or is provision for bad debts adjustment in terms of expense. It's the only way to do it. And if you do it this way, you're gonna collect maximum marks. Now, provision for bad debts, let's open the T account just like we did previous, so that it's just for the sake of completeness. I might take longer than the time allocated. I'm facilitating, I'm showing this one is the first one, so I'm gonna go deep with you. Other exercises you will see, we'll just go quick because we are facilitating. Now, let's format this cell and wrap it. Let's wrap. Now, provision for bad debts adjustment, put it there, put these lines so that it looks professional, just like yourself, and we put this double line to show that, yeah, we understand our work. We know that there is debit side, there is credit side, and it must be shown as such. It must be distinct, and then let's put the line here. Let's put the border. And then we say, provision for bad debts adjustment, it always has the credit balance at the beginning of the year, and that credit balance March the first balance brought down. That's how I always did it. And then here I will always say 2022 Feb on the last day. I will always have my balance carried down, because it's going to be the balance brought down. And when you look at again on the pre-adjustment trial balance, let's look at the manner within which it was put at the provision for bad debts. Look, they put the question mark this year, but last year they gave us 85,840. 85,840. And then what is our balance carried down? Our balance carried down becomes very simple. We're gonna say, okay, debtors control 2,746,300 plus what was incorrectly recorded. What was incorrectly recorded was posted in error to the debtors control account 33,700. 33. Now we can multiply this by it was adjusted to 3% of good books. Is that so? It was provision for bad debts must be adjusted to 3% of debtors control balance, which is 3%. And then what is our balance carried down? Let's use the calculator. Is 2,746,300 plus 33,700, which is equals to times 3%, 83,400. 83,400. Now you determine which side is bigger, credit or debit. Which side is bigger, credit or debit side? 85,840. 85,840 is the bigger side, and then 85,840 is the bigger side, and then the difference should come here to say this total minus the balance carried down. It should give me this amount of 2,440, which is called provision for bad debts adjustment. 2,440. Now it becomes simple, and then for the sake of just completeness to say 2022 March the first balance brought down. So is that balance carried down, which is brought down in the next financial year 83,400. Now you look at this and say statement of, because now the provision for bad debts adjustment, it's always the case as well. If it's recorded this side, it becomes the income. If it was the opposite, it was gonna become the expense. Those are the things that you must note. Those are the things that they ask each and every year. My view, of course. Now you look at the statement of comprehensive income and say there was provision for bad debt, for bad debts adjustment. Sometimes because of time, you would have shown your calculation here to say 85,840 85,840. What did I do now? 85,840 minus, you've seen that, 83,400. 83,400. Take maximum max, and then you know that you got the amount of 2,440. 2,440. 100%. Now, you go back to your question paper now. You're like, okay, I'm answering these questions. Let's go and answer number 4. The business signed a contract with Always Safe Securities for guarding the premises. The annual premium of 32 annual for the period ended was paid in full on August. Securities for guarding the premises. What is that? What is that expense? Security expenses. Now, this is part of operations. Security expenses. Let me increase this font once again. I think, yeah. Security expenses. They said they have an amount of 72,500. Now it goes back to this concept of 12 months to say you understand your 12 months. These guys, they paid this for annual. For annual, they paid 32,400 for annual, for the year. And the year in this case is until on 1 August until 31 July 2022. 31 July 2022. We are not interested in 31 July 2022. What is our financial year end? Is 28 February. They paid this amount for the year, 32,400 divided by 12. Let me do it in calculations. Calculation number 3, operating expenses, security. There is this expense they are speaking about in adjustment to say 32,400 was paid for the year, and it's equals to per month. It's how much? 32. 2,700. Now 2,700. We want the portion, meaning this amount is inclusive of this whole amount of 32,400. However, it was paid from August, September, October, November, December, January, February is part of the year. That other 5 months, it was paid for pre. So we're not interested in that 5 months, and it must be excluded in our book of which end on the 28th February. Whatever that falls outside 28th February, we are not interested. And because this amount is included in this figure of 72, here is this figure, 72,500, we must minus that 5 months. We must minus that 5 months of 2,700 times 5 months. Say we minus that 5 months, which is equals to 2,700 times 5 times 5, which is 13,500. We're gonna minus 13,500 minus 13,500. Why? They prepaid these expenses. 72,500 minus 13,500, which is 59,000. What else? The next one is All details in respect of February salary of an employee were incorrectly debited to the sundry expenses. It was not supposed to be debited to the sundry expenses. It was supposed to go to salaries and wages, or wages and salaries. Let's check how they put it. Let's look at the pre-adjustment trial balance and see what do we have: salaries and wages.